Hello and welcome to today's quick video, which is called S&P 500 and risk taking relief on ceasefire reached. So, such is the US dollar perspective. Note just how well those peaks ever since the Liberation Day had been sold off, and that respite on the Mideast, at least for a couple of hours, because Trump had already accused both sides of violating the ceasefire, how US dollar is slowly drifting lower, and that is not without reason, not without consequences. And it's not just about US yields, where I had made a prediction lately as regards where these would be roughly trading in the second half of this year. Would it be rather in the 5% region, 4%, or 3% region even when it comes to the 10-year one? Yeah. So here is the hourly chart of S&P 500, where we got the opening buying spree clearly dialed back. However, the sellers did not succeed, and there were a few outperformance signs, but what was most important was whether the overcoming of Friday's intraday highs would stick on a closing basis or not really. It did. Following the ceasefire announcement, stocks have extended gains and for now are ignoring those violations, and they are more or less focusing on what has been the actual damage done by the US to the Iranian facilities and the largely symbolic Iranian counterstrike on US base in Qatar. So much for how the market is interpreting the Mideast tensions, as is clearly seen in the oil price as well, where it went for one technical target and stayed there for now in the 200-day moving average on the daily chart. It clearly fell through the 70 level, and gold as well dialed back its progress made yesterday. But look at where silver is and where copper is. These are risk-on indications confirming the enthusiasm for now ruling in the stock market. Market breadth, has it improved sufficiently or not yet? There are three factors that have been most important to me out of those already mentioned for yesterday. It's as well the shape of the daily candle, no selling at the close, and the daily volume. Is it sufficient for, in your view, to count and as one that would last for a little while, meaning that we would see some follow through to yesterday's session? Yes. I had been as well clear on the weekend that DAX and European stocks in general are flashing a warning sign, and you can see that DAX is not really all that much convinced as US stocks are about a reversal to the upside, meaning it's struggling at those prior highs, and European stocks are lagging, which would be missing a risk-on ingredient. And as well, on a daily basis yesterday, DAX had not confirmed the veracity of S&P 500 upswing, which was helped mightily by discretionaries and Within these, Tesla did more than its fair share of work to the upside. My joint page will help you decide what's right for you based on what and how you trade. Combine the daily analytics with the premium intraday channels.